All right, good afternoon, everybody. How you doing?
Yay, Derrick's here!
Yeah, Derrick!
Yeah! I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. Oh man, all of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. I got out of Solar Edge. I got into SOUN. I got into a position called TSE. I did liquidate Upstart into the close. It was a great day trade. Happy to go over it if anyone wants me to. Yeah, that's it. A couple little options trades. All right. Is Meta still holding up?
Not, I mean, yes, not entirely, but
If-
the
if-
Q's just traded below the close.
If there's any one name where I feel like they could kill it on the conference call to the downside, it would be Meta. So I felt the opposite about Microsoft. I was like, Satya Nadella is the man. He is a great operator. Like, it's trading down into the call. Satya could definitely come in and save this thing, and to some degree he did. And if there's any one company that I feel the opposite about, it's Meta. Meta, a nice initial move here on the print. I haven't really looked at the numbers yet. We can look at them together. I see it is already off highs. But if there's any one operator who can crush the up move, it's probably Zuckerberg if he starts talking about all their capex spending. But so far, despite the announcement on some of the capex spending, Meta's holding in really well here. So, looking at the numbers, Meta beats on EPS, beats on revenue, beats on operating income, beats on ad revenue, beats on family of apps revenue, beats on family of apps operating income, misses on Reality Labs. Reality Labs operating loss $4.5 billion versus estimates of $4.53 billion. That number is sick. These companies, I'm not seeing any guidance in there, so guidance might come on the call. It's insane how much money these companies make that they can just throw $4.5 billion in the garbage on Reality Labs and have it like not matter. They just make so much money. These magnificent companies are absolute cash flow machines. It's really, we've never seen anything like it in the history of the universe, or the history of our planet at least. I don't know about the other planets. Yeah, Meta doing its thing. We got ARM down.
Yeah, ARM guided down. It was a disaster. You can't guide down at this point.
And I sold some snap into this up move, this off a secondary play on the Meta. Yeah, ARM not good. So ARM holding C second quarter revenue. It's kind of in line, 700 million to 830 million, estimates of 8.6. So it's the midpoint. So where's the miss on ARM? It's not the revenue guidance, not the second quarter revenue guidance. What am I missing here? Looking forward in the VTF. I'm not seeing. Josh, what's the issue with ARM? Oh, here I see what you posted here. Adjusted EPS, second quarter outlook. Adjusted EPS is slightly below estimates, but revenue is usually more important, and it's within the range.
Even the revenue was low end of the
It's like midpoint of the range.
I guess the issue is they didn't guide up, right? As an AI company, that's
definitely the thing.
Thriving in the chip space, you should be guiding up.
This has been the consistent conversation that we've been having, right? Is that good earnings reports are not good enough for a lot of these companies into these reports, and it seems to be the case with ARM. ARM's a very expensive company. I remember when we were shorting this back earlier in the year, and then that down move came in April. I remember taking a little bit of a closer look at the financials and the multiple, and then it's a very expensive stock. So definitely these really expensive names, good is not good enough, and it's not even good. You know, it's revenue guide is midpoint, which is fine. Adjusted EPS is below the estimate, and then their EPS missed by 20 cents. Oh no, never mind. That's Riot. Riot, a piece of crap company. Okay, and Qualcomm. Not as interested in Qualcomm, but what's it doing? Up. Qualcomm up. Okay. Oh, here's the meta guide. Thanks, Bill. They did guide. Sees third quarter revenue 38.5 billion to 41 billion with estimates at 39.16 billion. Okay, so also midpoint there. Meta seems like it's trading pretty well on those numbers. To me, I'm actually surprised at the degree of the reaction. I may or may not have sold a few puts into the close that are going to make me a couple dollars, but I'm surprised at the degree of the positive reaction, honestly, at least initially on those numbers. But we'll see. Keep an eye on it. All right, wild day today. Let's pop into the meat of the meeting. If possible, I want to answer everybody's questions, but if possible, I want to try not to do a 2-hour meeting today just because I've got a happy hour thing that I'm supposed to attend. It starts at 5. I'm more than happy to be fashionably late for it, but maybe not an hour late. But we'll do what we can, and all questions are welcome, like always. But I might give like the shorter, quicker answers instead of the longer answers today. SPY is up after hours? Okay, obviously with Meta. So SPY, including the after hours move, is up 1.75%. Qs, including $1.40 move after hours, are up 3.25%. Boom. And the IWM, man, disappointing potential failed breakout in the Russell. I think we need more clarity from how this Russell trades tomorrow. But the IWM up 0.6%. You know, green is good, I guess, but a false breakout above 125 with that close and a nasty upside tail on the daily chart is definitely not what you want to see. Tom, I had already wrote in the chat to you. If you want to reach out and have a conversation about trading somewhere else, you're welcome to reach out to me. I'm happy to talk to you. I'm happy to talk to you about trading prop with T3, or I'm happy to recommend you over to like Centerpoint, which you know is kind of my broker that I would recommend on the retail side. But let's just leave it at that point. You have your options here, so there's no point in complaining further. Either let's do something about it or not. And again, I'm going to ask you to not have that sort of language in the VTF. All right, so let's talk about the market today. So wild move. Look at the SPY chart though. SPY chart is still relatively muted here, which is what we kind of consistently see happen. Relatively muted SPY chart, but we did break up on the daily chart. So we had some resistance that had formed in the 547-ish area for the IWM. You had 4 highs in a row in that 547 to 547.50 range. You had a high volume negative Maribozu from Wednesday of last week, which was a really, really nasty day, where the high of that is 549.17. So whenever you have one of these negative Maribozus, negating that negative Maribozu is very important for bulls. And we were able to have that happen in the S&P today. So nice break higher in the S&P, nice recovery. To be seen, obviously, what degree of legs that can have. The Qs, we had a good conversation about in the morning meeting as well. So the Qs had another pretty nasty day yesterday, had hit beyond the maximum extension on the downside. So that maximum extension on the downside, or extreme extension on the downside, we like to say is $10 plus away from the ADMA. Yesterday, the Qs got to about $13 of downside extension. That is why, even though I'm still kind of big picture bearish on the Qs, we were really looking long. So we had a phenomenal call out yesterday at 1 o'clock to go long. A lot of chatter in the VTF about keeping some of that position for the bigger move. I spent time in yesterday's afternoon meeting talking about the way in which I like to look at risk-reward ratios, which is to try to find as often as you can. We'll still take our cute day trades once in a while to make money, but the big money comes from the big moves. And you want to capture those big moves on as much size as possible. The only way to do that is if you're able to have tighter risk. So the concept of looking for small time frame risk that's on a 5-minute chart or on a 15-minute chart, for reward that is going to be more on the daily chart. And that's exactly what happened. Great opportunity to be able to buy Qs at lows yesterday. Great call out from the team. Particularly, I know a lot of us are trading the TQQQ on that. So you could have gotten in the TQQQ for 15 to 20 cents worth of risk down there. And then the idea was if it closes a lot in your favor, and people were also asking me about rules on swing trading on yesterday's afternoon meeting, you are in a win-win situation. And when you're in a win-win situation, you want to maximize that, right? Generally, if you've got a position on intraday and it closes a lot in your favor and the daily chart looks like there could be more legs behind that trade, you should be willing to risk on a percentage of your position, not 100% of your position, but 20, 25% of your position, maybe 50% of your position in something that's more aggressive. You should be willing to risk some of what you've made in order to potentially make a lot more. For me, in a lot of trades, I would rather make nothing than make a little bit. Because if I make a little bit on every trade, I said this also yesterday, there's a common saying in trading that you don't go broke taking profits. It's a saying I disagree with. I do think you do go broke taking profits if you take those profits too quickly, too consistently. You need to be able to have winners on there that vastly exceed the inevitable losers that we will all have. So you're in the money a lot in the Qs at the close. Swing some of that position. I know it's a tricky time right now because of all the earnings names that are coming out, which can move the index is so big here, but keep some of that. What's your worst case situation? It gaps down really big, you get stopped out the next day, and you don't even really take a loss on it, probably. You end up break even on it, maybe even end up making a little bit of money on it. That's your downside. Your upside is that you get the follow through to the upside on the daily chart, right? We were talking about this morning that the Qs could easily follow through to these mid 470s. We got to a high of 472.20. So back over to the TQQQ, because again, I know that's what a lot of us traded. Now I'm talking about just in a day and a half, putting on a trade that is 15 cents worth of risk and being $8 in the money on that trade. That's a phenomenal risk reward. That's a phenomenal risk reward, and that trade's potentially not even done yet. There is still room for these Qs to bounce further. Meta's already helping after hours. Apple and Amazon are tomorrow. Who knows how that's going to happen? But after analyzing the action yesterday, after the close, really, Microsoft, AMD, kind of seeing what NVIDIA was doing, and then on top of that, Bill gave us the Goldman Sachs note at 8:15, the Goldman Sachs updated note at 8:15. It came out this morning. Bill gave it to us in the VTF, which was great. Appreciate you, Bill. All that information really had me thinking, even starting last night, and I was typing it into the chat. I'm sure if anybody was still around, it was after the afternoon meeting ended, that this could be one of those much bigger bounces in the Qs that really have some legs. And again, I'm actually still kind of big picture, and by big picture I mean over the course of the next couple months, bearish on the Qs, but I'm likening it to 2022, to the bear market. We're not in a bear market for the Qs, we're in a market correction. The Qs have basically pulled back down 10%, that's basically a market correction. But some of the biggest, fastest up moves in the history of the stock market actually occur in bear markets. And again, you can go back, we won't spend a lot of time on it, but you can go back and you can look at the 2022 bear market and you can just see some of these face-ripping rallies in the Qs. This rally here, I remember this one vividly because we caught it really well as a team. March of 2022, from a low of like below 320 in the Qs to a high of 370. It's a $50 plus bounce in the Qs in like a couple weeks within the confines of a bear market. Another one here in May of 2022 where we ripped from 280 up to 310. Quick $30 bounce in like, it looks like a week. A bigger one here, 269 up to 333. Huge face ripping rally. And none of that's the end of the bear market. We still would make lower highs and then lower lows in the bear market before we actually bottomed out in October. I actually still argue that the real bottom of the bear market was in May of 2022 because that's when the average stock actually bottomed. October of 2022 was when the market bottomed because the market is market cap weighted, and the last thing that got hit in that bear market in 2022 was your big cap tech stocks. That was, Amazon and Google trading below $100. I don't even need to look at the prices. I remember it because I was trading, and I remember it vividly because I was trading those names and buying the heck out of them when they were below $100 at that point. Though it was a tricky trade, they sold the heck out of those names back there. But the point is, in down markets, a lot of times is actually when you get the biggest, fastest up moves. So, thinking about it yesterday after we started to see our data come out after the close, and looking at how the market was reacting to some of those names, even with Microsoft trading lower, I was like, I actually think after this 10% correction that even if the selling's not done, and again, I kind of don't think it's done, we're about to enter this August period, which is a seasonal period of outflows, that we could be in the face of a much bigger rally than I would initially expect. If this was yesterday, it's not, it's today. If this was yesterday morning and the Qs were getting to 470, I probably would have been shorted. But after updating my thesis and my thought process, after seeing the data yesterday, before we had the Fed or anything today, I'm looking at the technicals. I'm looking at how we're fully negating yesterday's candle from a technical perspective, plus this concept that I'm talking about these bigger bounce periods. And I'm like, all right, even if we're gonna get a pivot high and work our way lower, which is still an if. This is an if-then statement. The way you want to be thinking about markets is always in terms of if-then statements, because guess what? I'm wrong all the time. You're wrong all the time. It's part of trading. I think actually the difference between a really good trader and a not as good trader is especially shown when their ideas are wrong. But if that short is going to come in, then I think that the short is actually going to be after a much larger bounce than I'm initially expecting on more like this accelerated downtrend. It's not going to be at 470. It's maybe going to be closer to the 21 EMA, which is around 475, or maybe even closer to this gap fill, which is all the way up at 480. So someone was asking me about that earlier today. I was like, yeah, maybe 474, 475 is where I'll start small. 477 I'm more in, but 477 is even a likely possibility. I don't remember who I was chatting with, but the person was like, oh wow, 477, I didn't even think we could see that. Yeah, Rich. So not only do I think 477 is possible, I think 480, 482 is possible. Now, the way that I trade, and again, I know a lot of you guys are new here on the team, a lot of times the way that I take these index level shorts, especially when we have upside extension, which is not the situation that we have here, a lot of the times, and I spoke about this when I was in the podcast thing I did with Mike Camo and David Prince and Scott Redler just like a week and a half ago, I build into them because they act as both trades and hedges to me at the same time. So if I do get into that QQQ short, I probably will be starting very small with room to build. Don't be surprised to see me start shorting it, small at 475, let's say. I'm not even saying I'm going to do that yet, but start shorting at 475 and still be short and still be building in at 482, even as that actually gets further away from me. That's actually might be when I'm actually starting to get heavier for the first time, because that trade not only acts as a trade for me, it also at the same time acts as a hedge. I've got 32 positions on right now. Every one of them is long exposure to the market. Granted, that long exposure is probably a little bit more correlated to the IWM and the RSP than it is the SPY or the QQQ, but it still acts as some degree of hedging to that portfolio if I'm able to short that to short, and I will at the same time implement the cash flow strategy that I spent so much time talking about with the team here the last couple of weeks on that QQQ position as I'm short it, so that I can make money if it goes down, of course, because I'm short, but also if it goes sideways, or also potentially even if it goes up. I sometimes will be positive on the position even as I'm short and it's going up. If as long as the rate of the volatility and movement that I'm able to get intraday is greater than the rate of ascent in that case, because it's a short position. So if you see me begin to short the Qs, that's how I will be doing it. But I'm not in a rush to be too early on it. And that's really what I was saying this morning. This morning was hard to buy, especially coming into the Fed, pre-Fed. A little bit hard to buy just because the gap was so big. It's difficult to chase a 2% gap up in the Qs into a declining ADMA. It's just not a good risk reward. The better trade, honestly, which doesn't help anyone if they're first coming in flat today, but it just is what it is why I'm not a pure day trader anymore. I'm both a day and a swing trader. The better trade, honestly, is just to still be long from yesterday, which you easily can be, and not saying, hey, I'm going to short this at the open this morning, or not saying, hey, I'm going to buy the open this morning into a 2% gap up. It's saying, wow, I'm still long from lows yesterday because we were able to identify all the factors that contributed to that trade. And remember, I said one thing that could negate the fact that yesterday was only a day one down is the fact that we have earnings after the close and the Fed. That's exactly what ended up happening. The better trade today was to be like, wow, I'm still long from yesterday. I did a good job yesterday, and I'm continuing to get paid from the good job I did yesterday today. And I love that concept. I love for myself, for my own trading, that it's like, all right, I did a good job trading today, but I reap the reward of the fact that I did a good job trading today over the course of the next day, the next week, the next month, sometimes the next year. And those profits just continue to build on themselves and build on themselves. That's why you'll sometimes see me be in positions for months or years at a time, yet I'm trading that position every single day. It's because I have this mindset of reward maximization. I am here to maximize reward on what I'm doing. I am here to manage risk, and I am here to maximize reward. And it's that combination that actually creates long-term profits. So we'll see if that plays out. That's the general thought process here initially. Obviously, Jerome Powell today, he didn't disappoint, but really what he said was just in line with expectations primarily. The market was pricing in, coming into today, per Bill's Bloomberg screenshot, pricing in 110% probability of a September cut. That was reduced on last check to a 103% probability of a September cut. But it seemed like Powell, Bill also said it, Powell was fantastic at never answering yes or no to a question. Like, he was like, maybe 114% now. Maybe, there's not going to be any cuts, or maybe there's going to be several cuts. It depends on, the ongoing data. But if you read between the lines there, he was basically, I think, confirming the September cut, unless a real disaster happens on, like, the July inflation number, the August inflation number here, these next 2 months. Unless there's a real disaster there, as far as I'm concerned, he confirmed the cut, and it's just going to be a matter of, are we getting 2 or are we getting 3? So because everything that happened today met market expectations, the market didn't actually do a whole lot. Like I said in the morning meeting today, markets move most based on surprises. There was really no surprises in today's announcement. So we had a good bit of volatility, especially after he started speaking. You can look at the Qs here because it's what I have up. You got the uptick, you got the downtick, you got the uptick. But for the most part, it just maintained the strength that we saw throughout the day. The IWM was definitely where the volatility was. Weakest at 2 o'clock, but then when Powell seemed to be confirming the cut for September, it gave the most amount of a boost, and then it sold off the hardest. Why did it sell off the hardest? I don't exactly know, but I would assume it has something to do with the fact that this was already priced in. It's already been priced into the IWM in this move here on the daily chart. So it wasn't really able to maintain those legs, and it's a little bit concerning that we had a false breakout above 225 today. because a lot of times when you get a false break in one direction, it actually leads to a bigger move in the other direction. Technically, after this upside tail, it would not be impossible for us to lose now. I think this like 220 to 222 zone of support and see us get a deeper pullback into the 216 to 218 area. It's not impossible, but I don't want to jump to conclusions. I want to see the price action tomorrow, because it's oftentimes the real move from a Fed announcement is actually the day after the Fed announcement and not the day of the Fed announcement. The day of the Fed announcement, it's robots gone wild. They're robots all over the place. They're buying, selling every sentence that Powell says. They're going crazy and they create these initial moves. Most of the real money managers that are out there aren't, making huge moves to their hedge fund at 2:01 1 minute after the announcement comes out. Most of them take the evening, digest the information, study their portfolio, figure out how they want to adjust their portfolio, and then the next day is when you get the bigger moves. So often, but not always, the day after a Fed day is a trend day, because that's when the real money managers are actually putting their money to work by buying or selling. So we will see tomorrow. We'll see. It was not the case on the last Fed day. It's not 100%. It was not the case on the last Fed day, where the day after the Fed was a trend day. I remember it was kind of like, I think, a midday V bottomish type of day. We'll see if tomorrow we actually get a trend day, and that would be great. That would be exciting. And then we'll see also if on that trend day where the relative strength comes into play. Do they try to buy this IWM back up through 225? It's still possible. Or does the failed breakout in the IWM lead to a faster move to the downside, and we actually start to lose that 220, 222 support? And in turn, is the reverse happening in the Qs? Do they trade opposite of one another like they have so often in the course of the last couple months, where we get further upside in the Qs? In some ways, you could say today was a day one to the upside, and we got back above a lot of levels, technical levels for the Qs. We negated this negative Maribozu from yesterday. We got above this recent resistance. We're very close to negating the intraday action from July 24th, which was the worst day for the NASDAQ since November, either October or December 2022. That high is 474.19, so we're pretty close to that. If we get above those levels and we have a trend day to the upside tomorrow, it won't be impossible to see those Qs work their way to these upper 470s or low 480s. But and again, the opposite could come in. Tomorrow could be a trend down day also, if that's what the managers decide they want to do. So I think that's to be seen. But for the moment, my thought process is the same as it was this morning. I'm looking for a bigger bounce to the upside in the Qs than people expect. For the moment, it seems like Meta seems to be helping that. But we will see after the conference call where the dust settles on Meta, and we'll see if we get that bigger up move. And at a certain point, I probably will look to short it. But I'm trying to be very, very patient on that trade, and I'm just also at the same time trying to maximize some of the long exposure that I have here in the market. So I think that kind of covers the market level technicals, which are obviously so important in market level thought process. From a day trading perspective, I don't have a ton of time, so I'm not going to go over my stuff too much unless anybody specifically wants me to. Upstart on the upgrade was great. Quick flash of my trade executions on this. Upstart, was great. I started buying some at 27.50 pre-market versus 27. I was adding 27 quarter, kind of working these ranges and I love this pattern, by the way. The ADMA catch up to the base, which basically becomes a bull flag on a news gap up. It's oftentimes when the ADMA catches up that'll try to go. It tried to. It retested 28 resistance again, and then it failed. Then it pulled back here, and I'm happy to talk about this as well because we said we could talk about it in the afternoon meeting if anybody wanted to ask me the question. When it looked like it couldn't break through this 28 after the ADMA had caught up to the base of the action, a lot of times that actually then indicates that the trade will fail. So now it's pulling it deeper in this equilibrium zone, not necessarily the end of the world, but after failing to break out on the third attempt of $28, it's starting to look like a problem. I'm thinking, you know what? At this point, I've raised my stop from the 27 area to the low of the day. I'm probably going to get stopped out. And then I was having a conversation with you guys at that point on the radio where I was like, I'm probably going to get stopped out of this upstart. That's what the probability looks like to me after it couldn't break through 28. Right now, it's at 27.50. My choices are to follow my game plan and get myself stopped out at 27.14 when it fails, or what if I just dumped my position at 27.50? I could save myself, 37 cents or something like that on times my tier size. And what I said out loud specifically, I was trying to say this as kind of a lesson, and of course at this point in time, I don't know if it's going to work or fail. I just think that my probability of success has been greatly reduced. What I said was, I'm following my game plan to the letter of the law. I follow my game plan to the letter of the law. I'm not going to liquidate my position to try to save myself 36 cents. I'd rather get stopped out. At this point, I'm going to make money no matter what. My worst case scenario is I get stopped out at lows and I make a little bit of money. My best case scenario is that what I'm viewing now as a lower probability situation, my trade works and I make a lot more. And then that's what happened. The trade actually worked and I made a lot more. It tested 28 a fourth time, and on the fourth test of 28, after the 15-minute caught up to the base, it was actually able to really break out and give continuation. So the trade worked out really well. I'm a big believer, and I guess I'll just answer the question that was asked at that time now. I'm a really big believer in the fact that consistency is derived from following game plans. So I don't change my game plan on a trade after I'm in the trade ever. I don't change the game plan after I'm in the trade ever. Even if I think, hey, my trade's gonna fail, I don't change the game plan on the trade ever. And I'll tell you why. The answer is because I'm not a perfect trader. And inherently, I can be subject to bad psychology. A lot of the times, if you see your trades not working out well, you go to yourself, like, oh my God, my trade's not working out well, or maybe you're down P&L on the day or whatever, and you're looking at the next trade that's about to fail, and you're thinking about the additional money that you're going to be down after it fails, and it can be very, very easy just to start. Maybe there's 10 reasons why your trade should succeed, and one reason why your trade should fail. At a certain point, based on your P&L or the fact that you got into a fight with your girlfriend that morning or whatever it is, we can sometimes have a bad mentality where we focus on the one reason why that trade's going to fail over the 10 reasons why that trade is going to succeed. We freak out, we hit out of the position, we don't follow the game plan because oh my God, I don't want to lose that extra, 20 cents or 25 cents or whatever it is on the trade. Let me just hit out now, and then the trade works without you. So I am a big believer that the key to success in trading is consistent profitability. The key to consistent profitability is to be consistent in your approach to the market. And the only way that you can be consistent in your approach to the market is to have rules-based game plans for every trade that you get in, and then follow them to the letter of the law with the utmost discipline. That is the key to success in the business. I don't care what your strategy is. When I spoke in Las Vegas last year in October, and I'm going to be speaking at the Trader for a Cause event in October in Las Vegas this year, if anybody's going to be out there for that. I'm probably going to talk on a similar topic because I think it's such an important topic. When I spoke there last year, what I spoke about was the fact that I've been managing professional traders at T3 since 2013, so like 11 years now. And it's so interesting that I have seen traders with like the exact same strategy where one guy can become super successful and the other guy fails. What separates two people with very similar strategies where one succeeds and one fails? It's the trader, him or herself, that separates the success or failure. How disciplined was that trader? How well was that trader able to follow the rules and be disciplined? There are so many ways to make money trading, and that's one of the things I've also learned over the course of my trading career is if you have a way where you can make money that's different than my way, your way kicks butt. My way kicks butt too. Making money is making money. I don't care how you make money as long as you make money. And there are so many different types of strategies and approaches that can make you money. You could be like Warren Buffett. You could just be a pure fundamental long hold trader. You could be a pure day trading scalper or an HFT algorithm. Complete opposite ends of the spectrum. They can both make money. Yet how many people are out there that think that they're fundamental guys like Warren Buffett and lose money? Or how many people are out there who are, like day traders or whatever, who don't make money when there are so many others that make money? It all comes down to you. Do you have a rule set that is creating consistency for your trading that makes you money? And that's, by the way, why I love this team in the Pro Desk so much as it's developed over the years. Because we got a lot of different folks doing a lot of different things. And it's great. It's great that we are able to communicate these different ideas and different approaches and learn from each other. It's always been my goal to develop a team that I can learn from. I finally have achieved that. I learn at least as much from the other people that are on this team here in the Pro Desk as I think I teach others who are out here on the Pro Desk. It's just absolutely incredible, and then that makes me a better trader, which in turn then makes you a better trader, and that feedback cycle of just everyone making everyone better by working hard and developing their approach further makes all of us better, more profitable traders. That's been the goal. That's what I've been developing here with this team for over 10 years now, and for some reason, we're giving everybody who is joining us as a guest the opportunity to be able to participate in that. So if that's you, I guess, talk to Amber, or if you want to be a prop trader with T3, email info@t3trading.com. I did not mean this to be a sales pitch for what I do. It more meant, I'm just super happy and super proud about how the team has developed over the years, and I'm very appreciative as well of the teammates that I get to work with, for how they've helped develop me as a trader over the course of the years as well. So that was the Upstart trade, which was a good trade. Traded this SOUN today. This was incredible. The low here was 99 cents. My stop then was at $4.98. The low here was $5. I didn't get stopped out by 2 pennies basically, and then the trade more or less worked. I did decide to keep a little bit of it, even though it didn't close as well as I would like. I really wanted a 520 closer better, but I just did decide to keep a little bit of it. I'm probably going to keep that tight stop loss on it tomorrow. And Solar Edge, I got totally out of today again. This thing has just been, has been absolutely paying me ever since I started getting involved in this back on that upgrade day on July 10th. That was a really good one. AMD was interesting. That sell-off was interesting. The turnaround on this thing was interesting. Some really good trading opportunities out there. There was also a lot of good trading opportunities at the index level that could communicated. Some that I was in, some that I wasn't. Some I missed some fills, potential positions by just a little bit. But like I was saying, on the counter trend trading stuff, I'd rather miss the trade entirely than be too early on some of that counter trend stuff, which definitely happened to me a few times today on the index level. Totally fine, no harm, no foul. And I guess that's it. That's all I got on my end. So like always, I am happy to answer any questions. Taff wants to know if we can get a link to the Vegas talk from last year. Not anywhere? I don't think so, right? I think that was like proprietary, like they own that. I think that they own that intellectual property. So you have to be there. But it was pretty cool. I got to speak with Jem Carson, who we really like here on our team. I got to speak with Andrew Left, who now just got arrested. I got to speak with the Nigerian brothers, who basically just talked about how great they are. And speak with someone else who also just spoke about how great he was. But it was really good. Huh? Yeah, Josh. Oh. No, Josh didn't speak. Josh was just in the crowd rooting me on.
I'll just say Derrick just said a very nice thing about everybody, and I'll just give Derrick another round of applause.
Come on, dude. can't. Who sponsors Trader for a Cause?
Traders for a Cause.
Traders for a Cause. But some of the sponsors this year are T3 is one of the sponsors. It's for a charity. T3 is one of the sponsors. Clear Street's a sponsor.
The main sponsor is Clear Street.
Clear Street's the main sponsor. So Clear Street, Centerpoint, a lot of others. SMB, a lot of others. Yeah, there you go.
You're also doing Market Mind Summit.
I'm also speaking at the Market Mind Summit on September 25th in New York City.
Yeah.
I got to figure out what I'm doing.
Probably with.
They asked me to do a panel, so I was thinking about seeing if Scott Redler wanted to join me.
Scott Redler might be joining you. That's
We'll see. Yeah, see. Maybe I'll let the red dog join me. I don't want to do a push-up contest with Scott after his heart surgery. I don't want to be responsible if something bad happens, because we all know I'm going to win again anyway. Everybody knows that one. Yeah, I got dinner with Scott and a few other people last week. He looks like he's doing really well. All right, let me scroll up here on the VTF and look for questions. Scrolling up to about 4:10 p.m. So we got, we had some fun in the office. It's very rare that we get Pat in the office. Pat came down from Massachusetts. He's here today and tomorrow. Josh was here. So we had a bunch of knuckleheads in the office today. So I apologize if we came off as unprofessional. It was a little more banter and laughter than usual, but.
And we all made money.
Yeah, we don't get the band together too often. We all made some money today, so we had a good time messing around a little bit. But hopefully we still came off as professional, because 99% of the time we're very professional. The other 1% of the time Josh goes off the rails, and
Off the rails.
we gotta pull him back, or we gotta send an intern to Pat's house. Scrolling down in the VTF. Bill, I'm glad that you're enjoying Centerpoint. I wanted to actually reach out to you and see how you're enjoying it over there. From Sebastian on Upstart. Do you think buying Upstart, let me use my other chart. Do you think that buying Upstart at 1010 on the break of the inside 5, on the break of the inside 5, 28, and the 2 inside 15s with a stop loss at 27.59, the low of the inside 5 was too tight. I like the trade. That'd be the first thing I would say. And I don't think that it's too tight, because I think that it should have broken out on that third test of 28. So you got pushed out of your trade, and then it worked, obviously. But where you got pushed out of the trade was when I was thinking that this trade was probably going to fail at that point anyway. So, it definitely is a tight stop loss, but was it a too tight stop loss? I don't think so. I like your trade. It's just unfortunate it didn't go there. And again, that had me thinking at that point that this thing had also a lower probability of success. And then it just happened to go and happened to work. Appreciate the question, Sebastian. From Jim, liking the open house. Appreciate you saying that, Jim. Tesla has a nice bullish setup on the intermediate trend, 30 or 60. So I always want to start with the daily chart whenever you're looking at small time frame charts. So I don't love the daily chart. The daily chart's improved a little bit, but you're running into some resistance at this zone between 237 and 243. So the smaller time frames probably are looking better. I got a 60-minute here. So you can see this, bullish breakout that's potentially setting up for a 234. But for me, the daily chart is what rules. I want my small time frame charts to coincide with my daily chart. And I see the trade on the 60-minute here. I just don't think that it corresponds with the daily chart. I also happen to be big picture, qualitative fundamentals, bearish on Tesla. I have a Tesla negative bias, which definitely influences my thought process. I still say the technicals rule. The technicals tell me how to trade my thesis and thought process. So if I have a thesis that says bearish, but the technicals say bullish, then I'd rather be long than short. For example, I've been having a bearish thought process for a while on Tesla, but I was super bullish for the 190 breakout back here in Tesla. I was calling for a long in Tesla, even though I'm like, I don't like Tesla. I think it's expensive. I think the fundamentals are deteriorating. But look at this beautiful long setup here. Let's go long. And that was obviously a great trade. So I'm not afraid, even if I'm more bearish, big picture on Tesla, to go long it. But I don't like the daily chart on Tesla right now. I think that the daily chart is neutral at best, probably more bearish. What you can't see here is that after hours on earnings, 235. I'm going from memory. 235 after hours from earnings was a level. So even though you don't see that on the daily chart, you're buying the break of 234 right into the 235 level from the earnings report. You might be able to go back into your chart to see that. And then you're also buying it into this broader 237 to 243 zone. So I'm actually more interested in the bigger picture short on a higher up move. If the Qs can push Tesla higher, if the 234 break happens, I'm more interested in the bigger picture short. That isn't to say you can't make money by buying that break at 234. You definitely can, especially with how Tesla's such a momentum stock. So the trade's there where you can make some dollars for yourself, but the way that I like to think about trading is in terms of layers of probability, and I don't think that you got all the layers of probability on your side. So a little bit of a mixed thing. Josh, can you just text me where we're going? So I don't even remember where I'm going.
That means nothing to Derrick.
I'm gonna go for a swim in the East River.
Text. Alright, drinks are on me.
Yeah, we'll see what happens with August this year. You know, election seasonality. I know that there was some Bank of America stuff on election seasonality that showed a little bit more bullish than I was actually expecting to see for August. But we've also seen, so this is towards Brian's comment at 4:30, and then this actually also answers Tate's comment to some degree on, is the rotation trade dead? I think it needs time. I don't think it's dead. So maybe August election seasonality can be a little bit more bullish than a typical August. But Goldman Sachs is still modeling a lot of outflows for the month of August, which is very normal. And what I've been talking about is one of the reasons why my more intermediate time frame August-September thought process is a little bit more bearish. It's more bearish for the SPYs and Qs. It's more bullish for the IWM. It's more bullish for the rotational trade. Just because the way the index is structured right now, if you sell $1 of the S&P, you're selling, last I saw, 29 cents of the top 5 companies and 37 cents of the top 10 companies. So basically, the weightings on the S&P are just so heavily weighted towards the MAG companies now, aka the Qs, that with natural seasonal outflows in August, that will most negatively impact the Qs. So that's why, and again, I need my thesis to be confirmed by the technicals, but my bigger picture thought process at this point is that the rotation trade is not dead, it needs time. Especially if I'm also right on the short time frame, right? Different time frames. My short time frame says this Q bounce is going to be further than people are expecting it to. This Q bounce, and this is what happens in bear markets, by the way. In bear markets, the bounces are so big that by the time you get to the top of them, Pat, what's the word I'm looking for? How the market feels. Sentiment. Thanks, Pat. The sentiment in those bear market rallies and like real bear markets in 2022 gets like super bullish at the top. Because the moves are so big that everyone's like, all right, the bear market's over. And then as soon as you hit that point, that's the top, and the next leg of the big bear market sell-off occurs. Again, we're not in a bear market. I'm not even calling for a bear market, by the way. I'm kind of calling for a continuation of this market correction, and maybe a deeper correction in the S&P. The S&P correction, I think, is like 4.8%. Last I saw, maybe it got more than that. No, it didn't even get more than that yesterday. The S&P correction is like 4.8%. I still think we can see a little bit more downside overall in the SPYs. If we get more downside overall in the SPYs, it's probably coming from the Qs. So my thought process now has morphed into that we get a big enough of a bounce here on the cues where the bears begin to throw in the towel, the bulls begin to reinitiate those long positions that they just delevered on the downside, and then once you see that begin to happen, then you kind of get the rug pull as the August seasonality begins to impact the market. Probably even especially so, I think, in the second half of August and the first half of August. But I think, and maybe let me actually take that back because I say that. I think that the first 2 weeks of August are very seasonally bearish. So let overall, August, I still think that those outflows are going to have an effect. Where they're going to have an effect is on the Qs, on Mag 7. That'll keep a weight on these Qs, but that'll probably happen after we complete this shorter term bounce that overshoots to the upside, maybe gets us up to even low 480s, something like that. So that's where my head's at. I think the rotation needs time. But let's also see tomorrow. And we still have Apple to report. We have Apple. There's so many moving parts, right? Apple, Amazon, huge jobs number on Friday. So we'll see.
It says it's processing, nothing.
Will AMD hit 150 again this week? I have no idea. It's really I don't make just the big kind of calls like that. Maybe it's more about how are you positioning yourself based on the evidence that the market is giving you to potentially capture that move or not. It was a pretty big sell down in AMD today, more than I want on just like an okay report. So I really don't know. I might say difficult and choppy in this 145 to 155 range. I think that's probably my highest guess is that it stays choppy between 145 and 155, but let's take it as it comes. Thoughts on ARM. The earnings report looked okay. A little bit of a miss. An EPS guide, rev guide was in line, so it's another one of these examples of an okay report leading to the stock selling off. ARM is very expensive fundamentally, so you needed a really good guidance, I think, on that, and you didn't get it. You got it in line, and they decided to sell it off that. I'm not looking to buy this dip in ARM. If that's what you're asking me, I'm not looking to buy this dip in ARM. The short, I think, might be difficult at this point. Just dropped from 155 to 130 in a really short period of time. You got extension here, but I'm not looking to buy this dip in ARM right now. Scrolling through here. What am I looking at, Bill? Is that seasonality? July versus August seasonality going back to 2015. When was the last election year? Was it 2020? What was the last election year? 2020? 7% up. And I guess the one before that was 2016, which looks like it was flat. Yeah, the biggest outlier year, that 2020 year. Thanks, Bill. Great information, like always. Appreciate you. Without today, the SPX would have finished red in July for the first time, wow, in 9 years. NASDAQ, it's like 16 years. The Qs are red, right? They're red for the month. So this is the first red month of July for the Qs in 16 years. Wow, sick. We called for it. We called for that weakness that could come in after options expiration into these earnings reports. Pretty interesting. I didn't look at the Carvana numbers at all. Oh, Carvana, let's go. I can scroll up and try to look at them real quick. Carvana revenue beats, retail units sold. I don't have an estimate to compare it to. Second quarter adjusted EBITDA. Looks like a B. Outlook, sequential increase in retail units. All right, looks decent. Looks decent for Carvana. Nice move higher here. Is this thing still got a massive short float? Anyone seen the short float in Carvana recently? Pat, I'm almost done if you want to wait for me. See how it is, Pat. Short float in Carvana is still 19%. Wow. Somebody's getting smoked. Somebody's getting smoked. Carvana looks good. Possible long versus like 145. What's the after hours action look like? Yeah, 145 looks like it was an important level after hours. It's an important level on the daily. That'd be a spot that I would write down for tomorrow. This is a monthly chart, is what I'm looking at. Yeah, 1 month chart with a big old doji up there. Wow. It's a scary looking chart. You know, if it wasn't like the Qs on a monthly, if that was just, if you just showed me any chart, I'd be like, whatever this is, just had a huge move and gave a massive doji after kind of going parabolic on this time frame. It looks like it's set for a big pullback. Is that an ADMA, that red line? That monthly chart's a little concerning, actually. This monthly chart looks like a reasonable pullback to 440. What does that do for us on a percentage pullback? I want to look at the daily now. 440 is not that bad. This brings us back to where we were in May. It's a big price congestion zone for the Qs too. And it looks like an appropriate price target area for a second wave down after a bigger bounce. So maybe that's what happens here, is we get that bigger bounce in this 480 zone. So that seasonal weakness comes in, you get that next leg lower, and you're looking at QQQ 440 coming into play. And then that corrects you a little bit more on the daily, on the monthly chart. You could even overshoot that. Looking at the monthly chart again, 425 even looks a little reasonable to me, and that corresponds with the 200 day on the daily. So I almost think big picture here, again, one day at a time. Right now we're still in the bounce mode, but if then statement, if you get the pivot high into this area and you get a second wave down, big picture 425 to 440. Reasonable. Very reasonable. Alright, it looks like I got through the questions on the VTF, so much less questions today. Popping over to the YouTube. From Uvixi Bull, you use the ADMA on multiple time frames. In the past, I've heard you talk about using it as a place to take profits. Yeah, just as a target zone. Have you ever used the ADMA to enter? No, I don't. I don't use the ADMA to enter positions, but I use it as a reference point for when I see something else that makes me want to enter the position. So if I get like an uptrending stock that pulls back and then gives me a hammer doji off of or slightly through the ADMA, I like the trade off that hammer doji candle on that small time frame, or whatever it is, that trending time frame, in conjunction with it being in that equilibrium zone. So I don't specifically buy off the moving average typically, but I use it as like a reference point for trades for an area that I would want to buy. I want to slightly walk that statement back. I will sometimes buy on the ADMA as just part of a cash flow trade, where I sold extension and I'm rebuying equilibrium, and then I don't care about the signal because it's part of the cash flow trade. And then from Chris, you know a lot of professional readers. I don't know if you mean to say readers or traders. Looking over my stats from journal, I'm only right about 25% of the time on my trades. Do you know other pros that can have a low accuracy rate that are successful? Absolutely. I don't think it's impossible to have a 25% success rate and be a consistently profitable trader. I would say that most of the consistently profitable traders I know are wrong more often than they're right, but that their success rate is higher than that. I feel like the 40% area is an area where you see a lot of really successful traders be, where they're right like 40%-ish of the time. So I hope that helps, Chris. All right, gang, looks like I got through all the questions on the VTF and in the YouTube. I'm off to a little happy hour over here. It's been a long week. I can't believe we're only through Wednesday. I feel like I worked a month already this week because there's just so much going on. But I hope everyone is enjoying. I hope everyone's learning. I hope everyone's making money. But even more important, I hope everyone's learning and having things that they can take away from this week and just seeing about how great this team is. So have a great night. See you all tomorrow.